The Hedgeless Horseman here, it's May the 3rd, 2023. Markets are up a bit, dollar is down quite a bit. Paper gold currently up, paper silver currently up, yada yada. Obviously the quote big thing today is the FOMC, and personally I think that's a complete waste of time because that's what everybody is watching, and it's like I don't know, it's like, what do I do with FOMC? They're gonna a pivot or not a pivot, whatever. It's like, yeah, okay, so how does that change anything? What am I supposed to do with the information, etc., that comes out there? Does that mean that Junior X suddenly becomes expensive? No, because they're cheap right now. The higher quality ones are very cheap, like 100% or 50% undervalued at least. So what am I supposed to do with that? I'm just, eating popcorn. It's like, yeah, if something happens and gold goes down or whatever, like always, somebody will shit the bed and people will sell because everybody is an ambulance chaser. So it's like, people react to price. They react to price and noise and short-term thinking and short-term perspective. If it's down today, I'm guessing it's going to be down tomorrow, so I'm going to sell. If it's up today, I'm going to buy because I think it's going to be up tomorrow. I mean, that's literally what everybody does in practice, even though they say they're long-term investors or whatever. It's our job to just stick to the same strategy at all times. If it's cheap, you're a buyer. If you find something cheaper or it's expensive or whatever, then you sell. Those are the only rules. Is it cheap or is it not? Not what the FOMC is going to say, not what the Fed is going to do. Is it cheap now? Is it cheap relative what it might become, a company, a growth company? And on that note, it's like, so what? Let's say something happens today, gold goes down 2%. Okay, what are you going to do with that or with that event? Gold might go up tomorrow. Regardless, if you're sitting, you're owning something, let's say a cheap junior, and you're like, hey, this is, should go up 100% easily. Yeah, just from, not even talking about going into very high sentiment and stuff getting really overvalued, but it's like, yeah, it's probably at least should go up 100%. And then you think that, hey, over the next 1 to 2 years, I think this company might increase up to 200% in value, if not more. I mean, some of these early stage explorers, which have made a discovery hole, etc., we don't know. Maybe they don't have anything. Maybe the next 2 drill campaigns will have, a junior trading at 20-30 million. Maybe in 2 drill campaigns over 1 to 2 years, it will be obvious that they have a multi-million ounce deposit worth 500 million. Why on earth would I throw that out the window and, let's say, sell because Fed said something, or FOMC did something, or there's a pivot, or gold is down 1%, etc.? Talk about missing the big picture here. It's like, yeah, it's dirt cheap relative to, hey, if this works, it could be worth 500 million. There's a 5% chance priced in. I think it's closer to 20% perhaps. Then it's already 4 times. I mean, it should be up 4 times from here. That is just common sense to me. But everybody, like you see, is focused on FOMC. It's like nobody even, well, first of all, almost nobody actually makes any money or real money or outperforms an index. So most people that you read their comments or opinions on Twitter or whatever, and the same goes for, fund managers, etc., because most hedge funds don't even outperform an index. So I mean, you should just, everybody's pretty much clueless when it comes to, people can, let's say, there's good macro experts who don't know how to translate their, let's say, wisdom into investing gains. I mean, pretty much like Bob Moriarty says, nobody knows anything. It's like I don't really believe in too much. I mean, trading, technical analysis, and all of that. I think it's at the extremes, it's a complete waste of time because it's going to have you selling low. For example, when you don't even need market timing because it's so cheap, so it's just a matter of when, not if you're going to make money. So why would I risk that by not being in it because the technical analysis suggests that, hey, we're not sure there's a bottom here. Doesn't matter. I mean, a paper loss, I mean, that's what everybody fears, obviously. I mean, people literally will not buy the most no-brainers of no-brainers if they think it can go down tomorrow. And I've talked, okay, a few concepts just refreshing. I talked a lot about this, especially a couple of months ago when we were down here. Okay, what are the only known things? We know the only two things we can know at all times is what price we're paying for whatever security. And the sentiment always changes. Meaning that no downtrend goes on forever and no uptrend goes on forever. So by definition, what a technical analyst or whatever might not or probably will not buy this or this or this or whatever low, because a bottom is supposed to feel bottomless. But if we just have some common sense, like, why is this day here? Okay, this is weekly actually. Okay, let's take it to daily. Why is it better to buy, and I'm using this as always as a proxy, why is it better to buy this sector on this day down here than here? I mean, some will say, hey, it's because, or most people will say, hey, because in hindsight, I mean, it's closer to the bottom, etc., etc. But you never know when the bottom is in. Why did this stop here? Why didn't it go down here? Why didn't this go down to at least this level? We never know. The only thing we know, by definition, if no downtrend lasts forever, that means that if this wasn't the bottom, we're one day closer to the bottom. And since it went down, it means it's cheaper. So regardless of when the actual bottom is, let's say we started buying here. We thought it was cheap here already. Okay, and we're gonna look quote silly for a while. Okay, this wasn't the bottom. The next day it goes down more. Why is that a better buy? Because it's one day closer to the inevitable uptrend at a lower price, which means quicker gains and higher, bigger gains. So it gets exponentially better. The buying opportunity gets exponentially better without only knowing that. Just that certainty that no trend lasts forever. So by definition, if the bottom is not in and it goes down another day, we're one day closer to the upswing when the big gains are made, and we will have bigger gains because we're starting off from a lower price level. Obviously, the last day, which nobody knew when it would occur, this was the absolute maximum or best buying opportunity. Why? Because it's the lowest point, so you made the most amount of money and in the shortest time frame. Because this point here was 4 months more until the uptrend started and a bit lower returns. So from a compounding perspective, I mean, if you theoretically could compound like this versus this all the time, I mean, obviously you can't, because you would have all the money in the world in a few years. But like theoretically, this is way superior than this. So it gets exponentially better. I mean, people literally sold this low here. People sold this, and mostly that was technical traders. They sold this low. So they sold and missed 462% return within 4 months. That is about as expensive as it gets. So it's like, what do we know? Again, using Bear Creek Mining as a proxy for the junior sentiment. Here we know, oh, this is the best buying opportunity since 2016. It went lower. Is that a blessing or a curse? Well, you're gonna get returns from here. It's just that you have the possibility of getting even better returns, because let's face it, if you bought here and you're complaining because it goes down, and it goes like this, okay, so that's from this point 483%, and let's say it takes to 2024, July 7th. So in less than 2 years you would have first paper loss of 47%. Paper loss, again, paper loss. And people would say, oh, what a mistake I made. Oh, how dumb am I? I'm gonna sell because it's like, hey, it might go lower, like they always do. But if we just hodled in this scenario, it doesn't matter what happened here. This could have gone down 99%. But since we know no downtrend lasts forever, at the end of the day, you would still have made 483%. So this was a bad buy if you sold, well, really at any time. Was like, it was bad if you sold here, 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 probably here, 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 here. Then this would be a bad buy. If you have the patience to wait for this sector to actually get fairly valued or overvalued, this would not be a bad buy. If you sold here, waited until it hit this level, nobody would say it was a bad buy. But it looks like a bad buy when it continues to go down. I mean, we've eaten a shit sandwich for over 2 years. There's not a lot of people that think, I mean, most give up, etc. I mean, that's the only reason we're down here, really. I mean, think about this. This is the commodities versus equity valuations. Okay, lowest, well, okay, it's up a bit now, I guess, but it's like around the lowest point in over 50 years. At face value, this is the best possible time in 50 years to buy. I mean, many people might not even see one of these in their investing careers. I guess 2000 was a good one as well. And one interesting thing about that is, like, if you look what the Huey, the gold mining index, did from 2000, around 2000 to 2011, which would be around here, but I think it had close to a peak. Well, not 2008 actually. I mean, this is commodities overall, not gold and silver only. But if you bought a brain dead mining index Huey here, held it until 2011, you would be up 1,760%. Stark contrast to what happened after that, obviously. Because since we're not even, the GDXJ and GDX are not close to their 2011-2012 highs. So again, goes back to no downtrend lasts forever. After a super sucky time period, probably at least a decade of suckage, you had a decade-long bull market. Now it has sucked for over 10 years. So now commodities are extremely cheap, and the LME inventories are at least at their 25-year lows, if not lower, because I think this only goes to, in at least 25 years. I mean, these should obviously not really go together, because, okay, the market is supposed to be forward-looking. Okay? if this is suggesting that, hey, there's never been, in 25 years, there's never been a more demand-supply imbalance. In a positive way, obviously, because there's obviously more demand than supply. That's why supplies are getting drained. So why on earth is the commodity space pricing in a glut in almost everything? Gold juniors are dirt cheap. I would say silver juniors are actually cheap right now. Copper juniors are cheap. Nickel juniors are cheap. Tin juniors are cheap. They're all pricing in the exact opposite of what the current trend is. So the question is, okay, how can they all be right? Are we going to have a demand crush in everything or a supply glut in everything or both? How's that going to happen? Yeah, we might go in a recession, etc. But that's just going to make the longer term supply problems even worse, because there's going to be even less investing in exploration and development. And maybe the governments will become even more draconian in some places and nationalize, etc. Oh, that's always great for supply. No, that's bad for long-term supply. So it's basically, would just make the coming bull even bigger. It's just crazy. I mean, think about how long you could have waited to see something like this, an opportunity like this. Like best possible risk reward in like 50 years. It's absolutely crazy. And just again, to reiterate what people, because for some reason, well, I shouldn't say some reason, I mean most people buy in this sector up here or up here or up here, etc., or here, whatever. So most people, and that's gonna, I mean, typically everybody buys high and sells low. I mean, forever. It's not that they did it once and they learned their lesson. Otherwise, a lot more people would be actually good at investing and have really good returns. That's not the case. But most people got in around here. Because the ones that got in here, I think they've already sold out. They sold out here, obviously. Or here. Anyway, a lot of people bought in here. Okay, that's not ideal, obviously. But here, everything looked great. Well, not everything, maybe. But it's like, yeah, people were enthusiastic. Gold was at 2,000, I think. Now we're down here. And people think, oh, I'm down 50% in my junior portfolio. And obviously, it takes very good news for any junior to go up right now. So it feels like, hey, I need 100% just to get back to even. And you see no evidence for 2 years that they will claw that back, let's say. Okay. That's how it feels at every bottom. That's how it feels at every bottom. And this was my first 5 months in the junior space. And I was all in. And I didn't have a lot of money. Minus 53.23% in like the first 5 months. Do you think... I mean, what would your reaction be? It's like, oh, I'm really good at this. I should keep managing my own money. I'm not made a mistake, whatever. Now, most people would get discouraged by this. Because they're like, I'm losing money almost every day and a lot. And at this rate, you know what I mean? It's like, yeah, within a year I will have almost zero left. Obviously, this is where conviction comes in, etc. I knew that was around here. I thought I bought in low, which was around here. Went lower. What happened after that? 518% in like 8 months. And all of a sudden, every single buy, every single holding that was down 50% on average was up. What did I do during this period? Did I throw in the towel, cry, saying, I'm not going to buy anymore. I see that all the time nowadays, and I've seen it for quite some time. People say, I'm not buying or selling. That means you have absolutely no idea what you're doing. I was buying all the way down. I started small. I think I might have had around $4,000 here. And 7 years later, whatever it is now, let's just say I have considerably more. But that was the start. Imagine if you started now. You couldn't have picked a better time to start. Best opportunity in 50 years. Absolutely crazy lucky to even be aware of this. Why? Because the only reason we're down here and all juniors are cheap is because nobody sees it. Nobody recognizes this. This should never be, the juniors should never be this cheap, given what is going on out there, given the supply demand, given the fundamentals, given how hard it is given the global demand for everything, the global trend of demand for everything, the supply trend for everything, pretty much. But they should be pricing in that commodities are going to become more expensive because we're not finding enough. No, they're not pricing that in. These charts shouldn't coincide. These lows should really coincide. It's like, oh, commodities are getting more and more precious. So commodities should have prices that reflect how precious they are. They're not. How on earth is the S&P 500 going to keep on growing if there's without needing more commodities? It's not like they're detached from each other. The overall equity market, all those companies, they use commodities. So how can they be pricing in a bright future, but commodities are pricing in like commodities won't really be needed? It's just the most absurd thing I've ever seen. So in this scenario, it's like I see a lot of people have cash positions, and I don't understand it, but I guess it's for some reason. Typically it's people are bottom pickers. Personally, I would, I have been all in since 2015. Ever since this, I've been all in. 2015, which is around here. Now the opportunity is even better. And there's a big difference, again, if I suffered through this correction and I said, I'm not buying or selling, AK, I have no idea what I'm doing, AK, why in the hell did I start buying in the first place, and when it gets cheaper, all of a sudden I don't know what to do, meaning I don't know what I'm doing. No, I deposited money as often as I could and just bought more and more. Because I know no downtrend lasts forever. This sector never stays cheap, and it never stays expensive. Commodities get extremely expensive once in a while, and extremely cheap once in a blue moon. They're extremely cheap. Why on earth do you think you need to bottom pick in a situation like this? If you're say 50% cash, when in the hell would you ever find an opportunity as so good that would you could muster up the courage to actually be fully invested? If this is not enough, it's just mind blowing. It's like makes absolutely no sense to me. But it makes sense to people that have invested longer than me, knows more about macro, etc. than me. But I just again, don't fix what isn't broken. My strategy has worked very well. And again, no market timing. Barely any technical analysis. Yeah, I look at charts now and then. But it's like, when this thing goes, through mean reversion, there's going to be hundreds and hundreds of % upside. Like Bear Creek Mining or any other trading sardine, does. It's like, yeah, rips, crash. Rips, crash. Rips, crash. Rips, crash. People act. I mean, that's literally what they're doing since their bottom timing, and they were bottom picking around here as well. Why on earth do you think you need precision? I've shown this before. Based on Bear Creek Mining, if you would have just bought as much as you can below this line, you would every single time have made at least 100% on every single buy. And obviously the lower you bought, the higher your returns. That's about as much precision as you need. But that's not enough for people. It's just crazy. People, if this is not enough for people to have the conviction to be, let's say, fully invested. And I'm not saying that people should do like me, basically, all in. But it's like, there are people who are like with their investable capital sitting at maybe 50% cash. That is absolutely mind-blowing to me. I don't think, going, let's say, being all in here is not a mistake. You ended up making money every time. It's like, who cares? Yeah, if you were all in here and now you're down 30, 40, 50%, you're not going to be down. That's not going to be a problem when these mean reversions happen. But that's the funny part. Like, everybody's after perfection. Even though, judging by most people's long-term results, there's as far from perfection as can be. First step would be to actually outperform an index. But that's the thing. Like, people seriously believe that why they are losing money is because they weren't all in from the bottom tick. I'm always all in from the bottom tick in this sector because I never sell. I'm very bad at selling. I'm very bad at trading. I'm bad at market timing, so I don't do any of that. The only thing I'm good at really is to buy cheap. And what's even better than, again, buying cheap is to realize that if it gets cheaper you should buy more. Not go the I'm not selling or buying route. If I didn't, I think I added maybe $1,000 or something over this period. Actually a bit more, I think, on average because it went down, but let's say $2,000. My portfolio today would look a lot different if I hadn't averaged down with just $2,000 over this downtrend here. If I did not average deposit and buy as many shares I could all the way down. I don't know. I just think about it, like from the, let's say, from the bottom here, for example, like, let's say that's a 700% future return. I mean, even $1,000 multiplied by 8 is $8,000. And that $8,000 in 10 years might be, I mean, if you compound that a good rate, I haven't done the math, but like it amounts to a lot over long term. There's nothing more expensive than to be selling these lows. And there's nothing more profitable than to be buying these extremes. You don't need precision. Again, I was down 50% first, then it went up 600%. In total, I might have been up 300 over this period. So I obviously wasn't all in. I mean, I didn't put all my money in at the exact bottom tick. Do you think I was complaining of getting 300% in like a year? Absolutely not. Superb results. Obviously, you can't compound like that. This sector doesn't go up 300% every year. That would be absolutely ridiculous. You would be up. Yeah, again, you would be the richest man in the world in like 5-10 years. It's the average that is important. I've said that this before. My goal is to compound at least 50% for the foreseeable future. That is my goal. 50% per year. Per year, not in a month, not in 6 months, per year over the long term. And that includes going down 50% and then going up like 300%. And then down 50%, maybe then up 300%, etc. I mean, that's basically how my portfolio is done. Goes up, crashes 50%, goes up 300%, because again, I'm always fully invested at exact bottom ticks. Because I never sell, really, so far. And obviously my cup of tea is to be an alpha stores where I think they could grow a lot. I mean, just a few, let's say a few examples here. It's like, just rattling some off. It's like Altamira Gold. Again, it's like, yeah, I look at shorts a bit. It's like, yeah, okay. I think there's a lot of potential in Altamira Gold. Okay. If that proves to be true, given the market cap is around, I don't know, 30 million or something, I think there's a shot they have a legit mine or two. What's priced in of them finding a $500 million mine, for example? Well, it's worth 30 million right now, so obviously not a lot. So if this works, obviously this is going to break and, yada yada yada. So again, if I could just time jump, if I did nothing, if I just held these stocks for 2 years, did absolutely nothing, came back in 2 years, anything could have happened. It's like, yeah, okay, if it goes bad for Altamira, maybe I'm down 50%, maybe I'm down 100%. If it hits close to blue sky, maybe I'm up 2,000%. That would pay equally, if I had equal shares, that would pay for every single other of the one of these stocks. If I held it for 2 years and then just saw what happened. Most people can't hold anything for 2 years, obviously. Most people, again, buy in here. If they aren't, if they're minus 50% and not up 1,000% in 2 years, they think they're doing a massive mistake and they're selling out to find a sector that works. You can buy Nvidia at a P of 100. There are more people buying Nvidia with a P of 100. Then there are even net buyers in the entire junior space. Think about that. That is how, I mean, I've seen some juniors, some of the better ones, there's barely any trading. That it's just absolutely unreal. You could take the market cap of Dogecoin. If all of those people just sold that, they could buy an entire junior space. That's how absolutely clueless and forgotten this sector is. Even though commodities is the lifeblood of all those companies, even Dogecoin, because without electricity, etc., they can't even trade Dogecoin, and obviously you need copper and stuff for that. It's just absolutely remarkable. Anyway, so it's like, yeah, Another one, like Pacific Ridge. I think that's enterprise value around 17.4 million. A bunch of copper gold projects. What if they end up finding a mine? Market cap is 25 million right now. What if I shouldn't say if, when this ratio is up here, and we have a even worse, if it's even possible really, a worse supply demand picture for copper. Like the Goldman Sachs, they put out a report that there's a potential for the visible copper stockpiles in the world to have run out in August. So what if copper goes to $6? Sentiment in junior space is high, and they show that they have a copper gold mine. What do you think the market cap is going to be in that case? Let's say that happens within 2 years. Obviously there's 10 bagger, 20, 30 bagger potential. Again, if I did nothing, came back 2 years, if those things would have happened, this would have paid for every single other one. Assuming I didn't, sell half, take a profit at excuse me, take a profit at a double, etc. Let it run. Because that's one thing. It's like people talk about these 10 baggers, even the ones that go up 10 times. Most people, including myself, typically sell out long before that. But it's like I'm not typically active hunting. I'm not typically hunting 10 baggers per se. Typically nowadays my biggest concentrations are in juniors. I think at least will go, very high probability of going up 50 to 100%. Meaning lower risk, more margin of safety kind of cases, like like in the hodl portfolios, like Eloro, I-80, Magna Mining, stuff like that, where you kind of more of a question of really a question of when, not if, and they have beta, etc. Point being, at least, is like the present, what the valuations are right now is only relevant from the viewpoint of where they are relative, where they might be or is going to be in the future. The past is the past. The worst returns comes after a bull market. And like a bull, like no trend lasts forever. Why is this a worse buy than here? Because it's 3 months closer to the inevitable top, and you're paying a high. This was the last day of the bull market. So that's the closest point to the downtrend and from the highest starting point. So all you know is that, okay, if this has been a bull for X amount of years or months already, every additional month is 1 month closer to the inevitable downswing, and you're paying a higher price. And anyway, it's like this is only relevant because where we're going to go. People complain about the sector now. This sector is so shit. I mean, most people can barely. I mean, they're not even buying. They're trying to talk themselves from selling. It's like, my God. Don't you know? I mean, there's a reason why they are this cheap, because nobody is rational when it comes to investing, or nobody uses common sense. Nobody thinks about the future. Everybody thinks about the past. In hindsight, obviously, it's always like, I wish I bought here. Yeah, but when this actually happened, almost nobody was buying, because they didn't see. They only saw this. there are not a lot of people that likes to buy this. How many people do you think buys here all the way? When for years they've seen no evidence of this sector really rewarding investors. And then when it has gone on for the longest period of time, when everybody has given up hope of ever making money in this sector, boom, it goes up 600%. Like, I have no idea which one of these companies, this no line, it actually broke out of this today. Yeah, it's just, again, it's like I'm not using these charts. Here we have Nevada King, that's actually broken out already. It's like, I don't know when something is going to go up. I don't know which one is going to go up when. I don't know how high they are going to be up. But what I do know is that if you give a project or a company that still has, let's say, a wide open deposit, obviously that could have grown a lot, be bigger 2 years from now than 1 month from now. So if you're, let's say, if things go well for take for example Pacific Ridge, we don't know, but there is a possible future where they have a, let's say, a tier 2 copper gold deposit. Okay, I'm paying 25 million for it now. I don't need to have a high certainty. I mean, if that's a 10% chance of happening, that they might have something worth, $1 billion one day, especially if we account for the reversion to the means. That's like my point. It's like some of these juniors will go up so enormously once this gets going, and this might be years before. It might be, from here. I mean, that's a decade-long bull. But imagine if you owned a company, you bought it extremely cheap right now, or here. The Huey did 1,700%, and Huey didn't grow that much. I mean, the large miners, etc., they didn't grow the resources by 1,700%. So imagine if you at least say get 500%, going from abysmal sentiment to incredible sentiment, or let's say 400%. Like announcing the ground here was valued at $20, up here it was valued at $100. So that's 5x. Imagine if you 5x'd the amount of ounces you have as well. That's 5 times 5. That's 25 times. 25 time return. That could pay for every single other stock you own, assuming they went down 100%. But that cannot happen if you're just looking on a 1 month perspective. No case, Pacific Ridge is not going to prove that they have a tier 2 mine in a month from now. But we know their deposits are open. And as long as they're open and not overly expensive, there's more upside potential. It's like, I guess my point is that, like, if you're down 50% and you think that's a big problem, you have no idea what happens during these mean reversions. 50% is like a walk in the park in this sector. Of course, almost nobody gets to see that, because almost nobody is even in the sector when the up leg starts. It's just crazy. I mean, if I could dream about, okay, if you started off with a small amount of capital, when would you like to be? What opportunity set would you like to see? Hey, okay. I mean, if I started off with, I don't know, $2,000 today, and you have the best opportunity in 50 years. that could amount to quite a bit. Maybe that portfolio is going to go up 20 times in the next 5 years. So even $2,000 could become a very meaningful sum. And then, what would be even better, again, if you're starting off small, is if this sucky sector is keeps being cheap, and you have actually a salary. Because let's say, okay, it's dirt cheap now, and it gets even cheaper for the next, let's say, 6 months. You started with $2,000. Okay, let's say you're down a bit, maybe down 20%, something. But you added $2,000 more, with even higher returns and quicker returns because it's closer to the next upplay. If 4,000 goes up 25 times, that's a lot better than having 2,000 go up 25 times. Maybe down here it's like 27 times on 3.7 thousand, whatever. So it's like, in my case here, for example, when this happened, people were like, thank God, finally. I would have more money today if this kept on going for a longer time period. If I could just have added 10% more before this took off, I would have more money today. So I'm glad I added all the way down. But I would have made even more money, because every single dollar I invested would have an average expected return of 600%. I don't know when the upleg was going to start, but you could wait a long time for 600% to make it worth your while. The market average is 8 to 9% per year. So if this did nothing for 5 years, 5 years, and then it went up 605%. That would be a superb result. That would beat the market handily. But you would never in a million years convince anyone that would be a good buy. It's like, even if somebody says like, hey, this stock is going to move in 5 years and you're going to make 600%. People would say, hey, I mean, there's stocks that could do 600% in 6 months. I'm not going to buy that crap. I'm going to go out and buy the ones that could go up 600%. I don't know really where I'm going with this. Now I'm just rambling on. Point is, that's like, there should be absolutely no confusion at all what to do now. Like I've shown before, there's a big difference between buying, holding, and selling. As things get expensive and the longer the uptrend has gone on, selling becomes exponentially better than holding, and holding becomes exponentially better than buying. But it's like they are worlds apart. So when people say, again, it's like, I'm not buying or selling. Let's say, again, if I bought here, saw this go down 53%, and I was like, I'm not buying or selling. I was willingly saying no to putting money in when the future expected return was 330, 344, 361. That is an extremely expensive hold. Buying, the merit of buying was going up a ridiculous amount. If I held here and didn't buy, because again, it's like I'm not buying or selling because I don't know what I'm doing. Yeah, at the bottom here, I just let a 615% return on my dollars if I had invested slip buy. That is not a buying and holding is not close at all, even though people seem to think they are. That is why I can't figure out why anybody could sit with 50% cash, for example, and be aware of this sector. It's just absolutely crazy. The expected future returns from this level we are here is absolutely enormous. So you're actively saying when you have a large cash position, again, I'm not saying you should do like me, of course, whatever you do to sleep better, never invest money you cannot afford to lose, etc. But it makes absolutely no sense from a rational perspective or a long-term compounding perspective. Because we're probably never going to see this opportunity that just passed a few months ago. That might have been the best ever buy in over 50 years. And now we're, around that level. I have absolutely no idea how anybody can have cash right now. But with that said, again, I mean, let's put it like this. If you're 80% invested of your investable assets, let's say, that's obviously a lot. It's not worth it to, I mean, it's not worth it squeezing the last margin of safety you have for, it's not worth, putting in your buffer or anything like that, because you're gonna be happy anyway. So of course there's a point where rational greed just becomes greed, even though it makes sense, but it's like Buffett says, you're risking something you don't need for something you need. I mean, that doesn't make sense. But it's like I would never understand if, let's say you have a portfolio where it's like 30% you are mostly towards commodities and you're sitting with 50% cash in that portfolio. That I will never understand. Because again, it doesn't matter. If you didn't buy here or sold here because you think this might go lower, and it goes lower, almost 95% would say, "Oh, you were smart, you were right." I would say that was stupid as hell. Because if you're wrong, and let's say this was the bottom, but you didn't buy, so maybe you buy in when it goes, or the best example I can have is probably this spike here. So let's say you didn't buy because you think it would go down. So you sold here. Let's say you sold here. Looked smart there for a while. Then boom, this sector goes up, like, trading sardines, etc. up up 100%. How on earth do you know if this was the bottom or not? Oh, I mean, this was very convincing. I actually thought this was, when we were here, I thought this was the actual bottom. I was, of course, 100% long from here. Again, I'm prepared. I'm prepared for the bottom to be in at any point in time. I mean, I think this was actually the bottom. But, so let's say you were again, trying to time the bottom. So you sold here. You saw this, you felt good about it, everybody said it was how smart you were, then it's up 100%. So do you think that's the bottom now? Okay, so you buy in. It's not the bottom, and all of a sudden you're down. 1 second. All of a sudden, just from buying here to just a few weeks later, let's say, you're down 40%. So let's say sold here, but the value investors who were just averaging down, they just averaged down. They didn't FOMO go all in full position here thinking, hey, now this is the bottom. No, so you just shaved off 40% in like a few weeks or a month, you're worse off than the dumb value investors who just average down. Same thing here. Is this the bottom? Is it not? I don't know. But if you average down all the way, you don't really care, because if this wasn't the bottom and we go back here, the longer this shitty sector stays shitty, your average, if you just average down, your average is going to go down and down and down, and eventually the bottom is going to be in, and then boom, you're going to have a full and larger position than you had 6 months ago, and everything's going to be fine. Because nobody knows when the bottom is in. So again, it's like, to me, this is pure greed. If you're selling here because you have a hunch it's going to go lower and it goes lower, you're going to look right. At face value, you're going to look right. And that, of course, depends on like what did you do. Because, okay, let's say you actually took a full position around here. Yeah, then that looks super smart. The problem again is, you couldn't for sure say that it was going to go lower. Nobody knows that. So worst case scenario, I mean, let's say again here, you sell out here because you think that's going to happen. If it didn't happen, you just said no to, let's say, an easy 500% return. Let's say this is when you buy back in, or are convinced that yeah, this was probably the bottom and now I have FOMO. You just cut your forward expected return in half. You said no to a 500% return, actively saying no. That's not good enough for you because you were going to get in here. Instead, you're left with 250% return because you tried to time the bottom. Because again, I never know, why did this stop here? Why didn't it go down here? Why did this stop here? Nobody knows. This downtrend may end at any point in time. All I know, it's cheap. And the lower it goes, it gets cheaper. I mean, again, it's like people sold this low because they thought it was going to go lower. So, I mean, that's basically this whole point. They actively sold what ended up being a 368% return in a few months because they were fearing that this was going to happen. It's just mind-blowing. Think about the asymmetrical risk reward. This is like we're sitting with as close to aces as you could get. So if you're on hold or selling or have a lot of cash, you're basically suggesting that almost a pair of aces, where it theoretically can't get much better, that's not good enough. Or let's say we were sitting in a pair of kings. A poker player would play kings every single day, all day, yeah, every day. You wouldn't fold kings because I might get aces next time. No, as soon as the expected future returns are positive, that's why I'm fully invested all the time. As long as I can find a company that I think will have positive returns, or there's a, on average, my portfolio is going to have positive returns over the next, well, forever, kinda. I'm playing. And now this whole sector is basically a pair of aces. So if I'm not investing now, when on earth am I gonna be investing? That's why it's so obvious that most people will never get it and never make any money. Because it shouldn't get much easier than this. It theoretically can't get much easier than this. This is the absolute no-brainers of no-brainers. And that is regardless if we know if the bottom is in or not. It doesn't matter. The worst thing that can happen is that this sector gets cheaper for a while, then it becomes more expensive again. And we don't even know that this is going to happen. This sector might be bottoming in today. you should just assume that every day is the bottom day. Because if you do that, you're gonna end up at least outperforming. If you don't think like that, you're gonna probably end up missing out on the best buys in, like selling here, for example. Best buy since whatever this period. Best buy in years. You sold because you thought it could go lower. Here people sold because they thought it could go lower. There's a big difference between what happens and if it's a smart move or not. Again, majority of people would say that if they sold here and it went down here, they would say they were smart to sell here. That is absolute bullshit. Let's say you got lucky this time. If you did that same thing here, you missed out on the best rally in years. If you sold here, yeah, you'd look smart for a while. If you sold here, you'd look smart for a while. If you just bought all the way down, you would look very smart. So again, market timing at extremes is the most redundant, greedy, irrational thing in the that I can come up with. In what world does this suggest that you need to be in at the bottom tick? Do you think that only people who made money in this move here was the people that bought the exact bottom tick, which nobody did, not with a full portfolio? If you just caught this move here up here, that's probably good for at least 500%. A no-brainer by definition should not need precision. I mean, I hope this goes through to people, that you understand what I mean about perfection is absolutely not necessary at all. Everybody's seeking perfection, and yet 95% of people can't beat an index. Have you seen anyone that's not afraid of a paper loss in the short term? Why on earth otherwise would people be relentlessly selling down here, unless if it was because they were fearing that somebody's going to sell it even lower tomorrow? Because you sure as hell can't look at the valuations back here and said they were expensive. And some poor schmuck sold here. And everybody wants to buy when they're overvalued, because they're going up. Yeah, long rant, but it's like, ponder these things. And there's a big difference between greed and rational greed. We might never see anything like this for the next several decades. Again, if you think you need to hit the bottom, you're wrong. If you think minus 50% is a problem when the sector is this cheap, you're wrong. My portfolio goes down like 50% here, 50% there, like 50% here, like 50% there. And if you're in companies that on average just keeps increasing value, they're gonna go down 50% from higher levels, etc., etc. Everybody that's not selling this sector right now is an absolute idiot, in my opinion. Absolute idiot. And that's a lot of people. But that's what you have to remember. Almost nobody makes any money. Majority of every single opinion you will hear when it comes to actual investing. I mean, there's a lot of people that are very smart about macro stuff and Fed and yada yada. But when it comes to making money, almost everybody ends up being an idiot in practice. Keep it simple. Nothing is simpler than this chart. Nothing is simpler than this chart. Now it's a bit cluttery, but can't get much simpler than this. And of course, I don't own Berkeley Mining because I'm not a big fan of trading sardines. Well, if now actually is the time I mean, trading sardines actually makes a lot of sense now, because they're the ones that go down the most and then go up the most without much happening. So those are kind of, I mean, in one way safer bets. So it's like I don't hate trading sardines, but it's like I don't love the well, let's say worst trading sardines, whatever. But I could make an entire trading sardine portfolio and make a lot of money from here. And I can make an alpha portfolio, which I also think will make a lot of money from here. I'm not against having a bit of both. Makes quite sense. Anyway, thanks for listening. If I mention any companies, assume I'm biased. Assume I'm biased. Assume I'm sponsored by them. Assume I own stocks of those companies. Always do your own due diligence. Never invest money you cannot afford to lose. And don't forget, you might think you're dumb, but it's like, don't underestimate how absolutely brain dead this sector can be. This is probably one of the most brain dead sectors in the entire world. And it's also one that's, like, to quote Pierre Lassonde, is the easiest sector. Because it forever goes down and up and down and up and down and up. It's almost boring, given that it's like, oh, I can beat this by just playing Pong. Yes, but you need infinite patience as well, because we don't know when this is going to hit this level. We just know that when it does, the miners are going to be up hundreds and hundreds of %. And if that takes 5 years, it will be more than worth it. That's it. Absolute no-brainer, easiest sector in the world. Thanks for listening. Bye.